Today we're diving into the golden cross. Now traditionally it's seen as a bullish sign, but things aren't always as they seem. So should you be excited or cautious? I'm going to explain what the golden cross is in simple terms, why it matters, and how to think about it in your crypto strategy, especially if you're just getting started. Okay, so what exactly is it? Well, the golden cross, it's a technical term, technical analysis term, right? So it happens when the shorter moving average, and in this case that's 50-day moving average, crosses over the longer term moving average, which in this case is the 200-day moving average, okay? So the next question is, what's the moving average? Well, think of it like this. The 50-day moving average, it just tracks as it says, okay? It tracks the average price of Bitcoin or any asset for that matter. It doesn't matter. Whichever asset you're tracking, it tracks that asset. And the 200-day moving average, well, it does the same thing, but it does it over 200 days, okay? So when that shorter one, and in this case, that's a 50-day, crosses above the longer term one, being the 200, it tells traders that the momentum might be shifting to the upside. So it's kind of like the tide turning in favor of the bulls, if you like. So why is it called a golden cross? Well, because historically it's been seen as a bullish sign. In traditional markets, it's always been a bullish sign. And from what we've seen in the short life of crypto and of Bitcoin, if you like, it's also been a bullish sign, okay? So it's a sign that trend may turn longer term and that higher prices could be on the horizon. So they then have an opposite one, which is called the death cross, okay? So we don't want to see that one for a while, appropriately named, but that'll be something we'll need to look out for as we come towards the end, as a signal towards the end of that bull run. Okay, so the golden cross historically was used in traditional finance. Okay, so your stocks, your indices, your commodities, just things like that. But in recent years, crypto traders and the crypto market have started to use it as well, and it's become a really big deal. It's one of the big indicators that people use. Okay, so crypto is incredibly volatile. So while no indicator is perfect, and we know none of them are perfect, the golden cross has historically shown strong long-term trend shifts. Think of it like the crypto equivalent of storm clouds clearing. So when you see it form, it's like the sky is starting to clear, okay? And that light shining down. And we're getting through that rough patch. So in previous cycles, when Bitcoin formed this golden cross, it was often followed by a major bull run. And we'll see that. It's not a guarantee. Like nothing ever is in this market. We know that. But many traders see it as one of the more reliable indicators of a trend reversal. But again, don't use it on its own. You have to use it with other indicators. Like I say, I use a number of indicators. It's just one of the ones that you'll use, okay? So a good analogy of it would be, imagine a massive cruise ship, okay? So that's your 200-day average. It's a big cruise ship, and then you have this speedboat that's zipping around. That's your 50-day moving average, okay? So the cruise ship takes a long time to change direction, okay? But that speedboat is zipping around much quicker. So when you have that little boat turn and head across in front of that cruise ship, it takes a long time for that cruise ship to change course. Okay, so that's why it's bullish, because the speedboat's coming across and heading up. It's going to take a long time for that cruise ship to change course and catch up with it before the boat crosses back across the death cross and the market starts to come down. So that's one way to think of it. So the golden cross is the fast moving price trend. So it's a 50-day. And that's overtaking the slower long-term trend, which is a 200-day. So the cruise ship. So it's a signal of the momentum in the market, basically. Okay, so let's have a look at the charts. So we can see here you've got the yellowy line, golden line is the golden, obviously, and the red is the death cross. Okay, so if we look back at some of the historical moves, let's look at 2019. Okay, we can see here, first of all, we got the golden cross. Okay, but then we got a pullback. So this is what we have to be careful of. We have to be careful of when we have this crossover, which can happen in the next day or two even, that we may get a pullback. So be aware of that and look out for it. Watch the other indicators. But look, we started at 5,560 and we ended up at 13,000. So the price more than doubled after we got that golden cross. If we then come in and we have a look at, let's say, what one? This one here, 2021, okay? Again, we're at 48 there. We then had a pullback. So I went flat for a bit, then we had the pullback down to 40. And then from there, we ended up at 66 or even here, 67, 68K. Okay, so another decent upside after that happened. If we look at one of the most recent ones, we could have a look at 2024. So this would be October, okay? So again, we're at 69, let's call it 70K. Went up a little bit after that. Then we had a bit of a pullback again. So keep an eye out for that. Before we ended up here at, what's that, 106K? And again, 106K up here. So again, we got that decent side upside. Now, at the moment, have a look at it. It's $300 from crossing there. So this is why it was urgent to get this video done today, just to make you aware of this is a key indicator we need to be watching at this stage of the market, especially in conjunction with other indicators, but definitely a key one for us to be watching in this stage of the market. Okay, so as we saw there on those golden crosses, we saw where we got those false positives, if you like. So it's where we got the golden cross and then we had the pullback. So you have to be really careful and keep those in mind, because what will happen is those moving averages will cross, but the price fails to follow through on that, okay? And instead it drops again. So this can happen, and it's called, there's a technical term for it called the death cross whipsaw, okay? So where markets go sideways or they fake out or they move differently, that's why I always say use multiple indicators, okay? Look at volumes, check the macro news, pay attention to the Bitcoin dominance as we have been, and of course, like, do your own research, build your own arsenal, okay? So as you know, I use a number of indicators. I'll use the pi cycle, I'll use the historical risk, I'll use the pure multiple, I'll use the MVRVZ score. So there's a whole bunch of indicators that I use in my arsenal or in my toolbox, if you like. What you have to remember is the golden cross is just one tool. It's not the whole toolbox, okay? So you need to build your toolbox, have this as one of your tools in that, but again, don't make all your decisions based on it. So when you see it, you should be zooming out, checking where we are in the cycle. So, you know, are we at the start of something big or are we near the top? So in my mind, the indicators are telling me that we're going to get our top somewhere in Q4. So for me, I feel we're at the start of something big. This is then a signal of the turn in heading up to the bull run. Check for confirmation. So has the price broken resistance? You know, look at the other indicators, like I said. Look at the RSI. Look at the MACD, you know. The volume. So is the volume agreeing with what we're saying? We're seeing that volume come into the market. All those things are going to be really, really important. Then use your strategy. So whatever your strategy is, that's what you need to use. So whether you're DCAing, dollar cost averaging, whether you're trading actively, use the signal to guide your moves, not dictate them. And remember, like, crypto moves fast, okay? So one day it'll be green, the next day it'll be red. And we know that. We see it day in, day out. So use the golden cross as just a trend indicator, not a timing tool, because it is purely showing you the trend of the market. It's an average, okay? So use it for that. For me, I feel like it's the indicator of the turn in the market. In the short term, the next 1 to 2 weeks, will we get a pullback? Potentially. So, but that doesn't say to me that the market's not coming, because historically we've seen that happen a few times as well. Okay, so just keep that in mind as well, because that'll be quite important as well in your decision making process. But look, I really wanted to get this video out today. Felt it was important because we're about to see those lines cross. Hopefully you got some value out of it. If you did, hit that like button, smash the subscribe, Click the bell notification so you can be notified when I release my content, and I'll see you in the next one.